Good afternoon. This is Tom Alexander. It is Sunday, September 22nd. This is the weekend update for the stock indices for the week of Monday, September 23rd. I am Tom Alexander. If you're finding me for the first time, you can go to alexandertrading.com here. And there's free information here. Click on weekly update and you can see this weekend's update. I have all the charts here. There's a PDF you can download, but you can go back and you can look at other weekend updates. Hopefully you can learn something from that. You can certainly see what I was saying before it occurred and compare what I'm saying to what occurred to see if there's any veracity in my form of analysis. And if you find value in this, I would very much appreciate it if you would like and subscribe. Okay, let's take a look at the markets. We're in a bull trend. Here's the bottom line. The market should go higher from here. The bottom line is that as long as in the SPX about 5,600 holes, we should work higher. We had a rather dramatic day on Wednesday that was Wednesday, Thursday, where you had the big drop on Wednesday following the Fed circus. And then that was immediately retraced in Globex before the cash market opened. We went higher on Thursday, and then Friday was sort of a digestion day. But the bottom line here is that this market should work higher. Now, what you see on my screen, anytime the market has two consecutive up days or rallies 10 handles, all the gurus on X come out of the woodwork, picking the top and giving you 700 magic numbers for the top of the nuclear grand Armageddon super cycle wave 55555 top, with the market going to zero and unity at short down. Well, at some point we'll probably have a significant decline, but there's no evidence of it in sight at this point in time. And to put the rally off of the September 6th low into perspective, the rally we had from August 5th into August 26th carried 10.43%. It lasted 15 trade days. If we were to have a rally of similar magnitude, it would reach about almost 6,000, 59.70, and it would last to next Friday. Now, I'm showing this simply for perspective. There's no such thing as overbought and oversold. That's one of my pet peeves. I think any serious trader will tell you overbought and oversold are pretty much nonsense. Could we go this high by next Friday? Yeah, you could. I don't think that's going to happen. I think the market will be more two-sided. However, in any time frame you look at down to super short-term charts, the trend is up. We're making higher highs and higher lows. Now, what last week did for us was give us, at least for now, the definitive line in the sand for the bull thesis. And that basically is Wednesday's low. I have 55.96 here. That would close this gap in here, but that's not that far above last Wednesday's lows. If all four of the primary indices that we follow, the SPX, the Russell, the NDX, and the Dow, all closed below last Wednesday's lows, then we can have a discussion about what's going on. And maybe the trend has changed. But unless and until that happens, any retracement should be considered just that, a retracement in a bull trend. All right, this is the SPX. By the way, all of the levels that you see on here are derived from trading, auction market trading. They're not magic levels. I don't use magic numbers. There's always a fib level within 3 handles of wherever you are. There's so many fib numbers, it works. It can't not work because there's so many levels. But anyway, this, on the other hand, is actually the levels you see here are levels established between buyers and sellers, either rejection or levels that have been tested by the market itself. And that's how I determine inflection points. And that's what most people refer to support and resistance. What they really are inflection points. Okay. So this is the SPX. You can get these levels by going to the website, looking on the website. If you want to download the PDF and print it out, you can do that from the website. Okay, let's look at, let's just run through. Here's the index. And the index is actually bumping up against this August high. It's been lagging a little bit. Now, if we close above this 19,958 level, there's really nothing until 20,690, 691 in terms of auction, from an auction market perspective. And obviously, if the NDX begins to catch up, it's been lagging. The SPX is certainly not going to decline, and that could fuel the next 2-3% rally. Okay, let's look at the Dow. The Dow is trading in new all-time high ground, new all-time weekly close, daily close last week. And then if we look at the Russell, the Russell is bumping up against this high made on the 18th, but it's been showing some relative strength. So that's one to keep an eye on. It's a broader index. Now, the broadest index that we cover consistently is the New York Composite. It is also trading an all-time high ground, made a new all-time high close for the week. The highest daily close was on Thursday. We had a little bit of digestion on Friday, but the levels that you see in the indices here are the immediate important levels. Just here's the equal weight. The RSP is the equal weight. S&P, it's in new all-time high ground. The transports had an interesting reversal from a very important level, but they have been showing some strength. It looks like they're trying to break out. The NASDAQ composite, the broad NASDAQ composite is looking healthy, starting to show some strength and participate. So there now, could Thursday, Friday have been an important top? Could be, but it's not likely based on what we're seeing in terms of price action. And again, you have to see last week's lows, Wednesday's lows taken out before you can get excited about the possibility of anything significant occurring to the downside. Okay, let's take a look at the internals. This is breadth. This is NYSE data. I use breadth data, advancing, declining issues, and then the net of that breadth. The red line is a 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of NYSE advancing issues. The histogram is just net breadth as of the close. So we had at the end of last week, we had like 8 out of 9 days of positive closing breadth. That's unusual. It's showing strength. Now, we could get some backing and filling in here, or frankly, there's nothing really above current levels in terms from an auction market perspective. We could also accelerate from here. The fact that the 10-day moving average is reaching an upper extreme is usually bullish. It usually does not coincide with an immediate top. There are exceptions. The most recent exception was the middle of July, when we topped here and dropped almost 10%. But again, for that to happen, we're going to have to establish a series of lower lows and lower highs. You can go to an hourly chart and see that. So, but for now, everything is in go mode to the upside. Let's look at VIX. VIX remains elevated. Now, I mentioned way back a couple of weeks ago that what we could have seen, we had this very low VIX heading into the top that occurred in mid-July, and then we had this big spike in VIX. And since then, we've had we're trading in new all-time highs, and we've had a significant rally. And maybe we have a higher floor in VIX now. But it could be, if VIX continues to decline and gets below this recent low, which is around 1465, then you could see this market go a lot higher before we get any sort of significant retracement. So guys, I hope you find value in this. Again, I would really appreciate it if you would like and subscribe. Have a great week. I'll speak with you again soon.